Aloha, 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 and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 Pips, rocking and rolling 21st of August, 2016. Not making any trade calls or recommendations. We're here for educational purposes only, and the fact that you're listening to this means you've read to understand you accept all the disclaimers on the blog, understanding that we're doing this for educational purposes only in a learning context. So, what's going on, and what's going on, guys? Again, hope everybody's having an awesome weekend. Officially, we're off, so this is kind of like an illusion. We're not really doing this update, but managed to find some time to record this, as I know a lot of people like to listen to this before the weekly opens, so it's the least I can do. We'll officially be off and back for Thursday, Friday trade, right? This week, in terms of data points on the calendar, Monday's a pretty dead day. On Tuesday, we will have BOJ, so Karuta on deck in the overnight session, and fairly, slow day. You've got those PMIs, and you do have a new home sales out of the U.S., but fairly quiet. Wednesday, not an awful lot going on except for those existing home sales and crude oil inventories. And then, things start to heat up on Thursday when we've got the German IFO, we've got unemployment claims, core durable goods out of the US. And then, Friday, we've got some more data. But more importantly, we've got Auntie Yellen on deck, Jackson Hole. So things should be interesting, right? And as you know, our base case expectation was for things to pick up again on Thursday, Friday. That's also a reason why we're going to take advantage, hopefully, of these fairly quiet days on Monday, Tuesday, Wednesday to get rested, refreshed, and ready for those 2 days. Our base case hasn't changed much. A lot of wheeling and dealing, chop inside of range, velocity of mood inside range. And since the last non-farm payrolls or FOMC, our base case has been for whippy conditions, but dollar strength all the way into this Jackson Hole, bonds heavier, etc., etc. So that's playing out. So even though intraday trading might be fairly choppy, if you're on those trades, which would be, the bigger shorts on Aussie, Kiwi, etc., you're just riding those. You got to sit them out. So we don't feel there's an awful lot of edge trying to micromanage them. You just have to, if you want to stick in them, you let them play out, right? So fairly quick, let's go through these charts because not a lot has changed, right? So gold, wheeling and dealing here, we talked about the fact that these 1350s were pivotal. Here, I think a lot of people getting confused by the action because everybody expecting this to really skyrocket aggressively. Here, we would not be surprised for gold to continue to stay choppy and possibly test a little bit lower, right? But still, we would expect new highs to print, or at least to break last week's high. Sorry, not new highs, but to try and take out these highs, right? So maybe early in the week we might try a little pop, maybe, and then we'll probably end up clearing the downside too. So it would really not be surprising into Jackson Hole to see us clear tight stops here. Basically, what does that mean? That as far as we're concerned, we're in this broader range, right, with this 1400 to the upside and this 1300 to the downside, and here we're hovering at mid. So as we wait for the next bigger move, for us to resolve outside of this formation at highs, whether it's going to be a resolution to the upside or to the downside, we always feel there's very little edge in trying to play tight inside the range, or at least in the middle of the range. So we would expect all tight stops here to get taken out before the next move actually takes off. So again, not a lot of edge there. Daily closes above or below 1350 pivotal, but still in that choppy range. We'd still have a slight bullish bias on any pullback, right? ES, what's going on at ES? So a lot of chop here. We said that it looks like, or at least in this kind of slow chop, the path of least resistance would be for the market to try and probe higher, and stops above these 2200, that whole level, are probably extremely interesting, right? Extremely juicy. But it does look like it's having trouble. We still feel that the healthier move would be to the downside, and whether we do probe higher, whether we do need to fail from a higher level, we still think the healthy move is back to the downside. So unless we get a daily close. And again, it's, we're trading here at 2182s, but we try and look a bit at the bigger picture in these Sunday outlooks, right? We don't want the whatever we talk about to just be obsolete after 2 hours trade. So we would say as long as we don't get a daily close above the 2200, we still expect the market will likely come and print lower, into these 2233s and maybe even lower. So what that means, that essentially means that as far as we're concerned, we feel that the risk for the next 50 to 100 points is lower, not higher. That doesn't mean we might not have to press a little bit higher first, but we think that, in terms of odds, they're stacked up. We'd rather be looking to sell some rallies tactically for a bigger move to the downside. But again, the levels haven't changed and we're still hovering around these highs. What's happening on Aussie? Not a lot. Still all about these highs. As far as we're concerned, this hasn't changed. Our outlook is still for some kind of a complex topping pattern to be in place. As long as these highs don't get taken out from a day close basis, we expect the path of least resistance is lower. You have to respect these areas because there's a lot of chop. You have to expect the 76.20s and the 75.30s, but we ultimately feel that the chart is telling us that even though it's choppy, the resolution will be to the downside, possibly even to 71.50s. We have to respect all these levels of support or resistance, but we're also trying to give a bit of a steer on the bigger picture. From a daily close perspective, on any day early in the week, 76.20s is the first place to look from bull bear line in terms of daily close. Okay. Kiwi, also, as long as we don't close from a daily perspective above this level, we feel the path of least resistance is still to try and clear the downside. It's holding more of a bid than Aussie. It's very, very tricky here. The way it's coiling, it would not be surprised that we clip some more stops higher. Day close will be pivotal. If we do end up getting a day close above this level, we would not be surprised to see this trying to extend higher into these 74.70s. But if not, we would expect this to come back down towards the 70.72s. From a structural basis, from a bigger fundamental basis, talking 2-3 months, maybe quarters down the line, we still think the bigger move is lower, not higher, back towards this area rather than this area. Crude, what's happening on crude? So very aggressive covering here. A lot of people trapped to the short side. We felt that the move wasn't going to be so aggressive to the upside. Again, caught a lot of people off guard. We did think we were going to get a little move to the upside after we got traction to this level, but we thought that these 75.80s into 78s would actually cap for another move lower, right? Whether it was going to be a resumption of the move down or whether it's going to be a pop, we thought it would be healthy to get some kind of retracement here. Now, no surprise, I think a lot of people were looking for that. It clearly didn't happen. We felt that there was a chance of this happening unless we got a daily close above the 47 mark. Clearly did not happen. So right now, what's happening? Well, right now, it looks like that move off lows to highs, right? We talked about this before. It looks like this retracement is fairly pure, and it looks like the market is set to try and take out 51.70s and to complete this move back into 57.80s and higher into the 60s. You have to be cautious on crude because moves could be very, very aggressive. Needless to say, we're not of the camp that believe that a healthy market is a market that moves only in one direction for a sustained period of time. If there's a market that can be stubborn, that's crude, okay? We would still expect offers to try and cap into the 51.70s. That would be, we would then expect to move back down into this whole area 47s again, at which point, if this area holds aggressively, we would expect those highs to be challenged extremely aggressively. If we get a very quick reversal and we go knife through butter the 47s, we would not be surprised to see back into the 42.40s extremely quickly. Very choppy trade. We'll have to see what happens. Keep in mind, a lot of Joe boning, a lot of comments on the wires, still summer condition. This could be extremely aggressive, extremely costly for people who are very aggressively and stubborn. Euro, what's happening on Euro? I think Euro is particularly interesting here, right? So we're seeing all this move around these pivotal levels. Now, the fact that we've caught such an aggressive bid above the 112s and we're pressing here in these 113.40s would look like it needs to press higher. It wants to press higher. I would just say respect this area, right? I think here, once we start to get daily closes above the 113.40, then there's a clear chance that the 115 is in play. However, if the market fails to hold below above that 113.40s on a day close, I would not be surprised to see a very quick move all the way back down into those 112.50 into the 112. Now, the move back higher is not out of the question as long as we hold the 112.50, 112 from a daily close perspective. If we start to get daily closes below that level, then I think this could get extremely heavy and we see the 1050s very, very quick, right? So in terms of the bigger extremes, it's still that 1050 and that 115 with these two pivotal levels in the middle and a lot of chop. But right now it's looking bullish. Probably a lot of people are looking for this to come back down, these two moving averages to hold, and for us to continue the rotation higher. We're still a bit weary. We still consider it to be a broader chop zone, so we would not be looking for big swing moves. We would be looking for more tactical action. We would prefer to express swing moves in Euro or USD through other currencies rather than Euro USD here. And last but definitely not least, yen, hovering around this 100. It seems like there's not a lot of drama around the 100. Keep in mind we're going to have crude on deck. As we've been discussing in the past, we felt that even though you had to keep an eye on the 100 was really not the line in the sand because it had been pierced before, and this was the tell. So as far as we're concerned, even though clearly it's holding heavy around the 100, we're not going to see very aggressive and puke action unless we get daily closes below those lows. If we get aggressive daily closes below the 98, that dip on the wick we get, then we think the 95s will clearly come into play and they could try and come into play quickly. Now keep in mind, in terms of BOJ intervention, I think the talk has been from the finance ministry for the BOJ, unless the moves are, really aggressive and speculative. I think they've already given an indication that for them that means 5 figures in 1-2 days, something like that. Right now the move down has been fairly orderly, so if we were to go by what we've heard and what we've been told, you would not expect aggressive intervention, you would only expect verbal. Now if we get closer to 5-figure moves in a couple of days, then you would expect the chances of real intervention to skyrocket. Right here, that's what we're looking for. We still think that if we don't get daily closes below this level, the risk is for more of a correction back to the upside. The levels are the same. Those haven't changed. They're all similar and the same as what we discussed in the previous updates. Again, thank you so much for listening. Thank you so much for liking, for sharing, for supporting these videos. I wish you an awesome Sunday, rest of the Sunday, wherever you may be, rest of the weekend, wherever you may be, holidays if you're on holidays, non-holidays if you're not on holidays, and we'll see you back on Twitter and on the blog, Rocking and Rolling for Thursday, Friday, and let's see what happens. Should be very interesting. Already looking forward to it. Thank you again. Bye-bye. Take care, guys.